Hi, welcome to this video day, which is on the 16th of July. It's Tuesday. We're just going to be looking at a simple strategy, which we believe is one of the best ways to trade the Forex markets. And regular viewers will already be familiar with it. It's basically tracking smart money in the Forex markets. And when smart money diverges significantly in terms of its positions from speculators, go with the smart money. Now, in terms of trading with smart money, the currency I want to focus on today is the Canadian dollar. We're going to be looking at USD CAD, CAD CHF, GBP CAD, and CAD JPY. We'll go to the charts in a moment. Now, what we've noticed is that the smart money has just sold the Canadian dollar in a huge amount of pairs, while speculators are buying heavily. Now, in terms of the tool that we're going to be using, it's the COT Net Traders positions, totally free tool from the CFTC. Will tell you actual positions of smart money, commercial hedgers, and speculators. When those two groups really diverge like they're doing in the Canadian dollar, we expect to turn in favour of the commercials. So obviously bearish of the Canadian dollar. If you want to learn more about the tool, you can click a video on our channel called COT Net Traders Indicator. But in terms of the divergences, we will discuss them as we do the charts. I did look at the Canadian dollar when I was doing my weekly forecast at the weekend. I was bearish then. I'm even more bearish now as we've opened up the week and we've had a couple of days of price action. Now, right, what we are going to do is we are going to go and take a look at the trade setups. But please do keep in mind, when I'm giving my view, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily sentiment, technical analysis of 14 Forex pairs, and also all our COT Net Traders analysis, you can click on the link beneath this video, get live access to our member center. Right, the first pair we're going to look at is going to be USD CAD. Right, we're on the USD CAD daily. Draw my levels in a moment, but first of all, let's have a look at the sentiment fundamentals behind the chart. Now, I've put CAD bullish fundamentals exhausted. That's my view. Okay, it's obviously not the view of the majority in the market. And here's a typical quote: USD CAD to decline a further 4% this summer, says Societe Generale. CAD shines as Fed cuts and Bank of Canada stands apart from the G10 crowd. Typical quote from PS Live. What they're saying is effectively that, Bank of Canada is one of the few central banks the market believes is going to remain on hold. They're not going to be cutting interest rates. They believe the Fed will and several other central banks. So that's what their view is based upon. Now, I think that view is kind of flawed, okay, going forward. And in terms of the points I've written down here, point number one, on the COT Net Traders report, specs are net short for the first time since March 2018. Okay, it's well over a year ago. Smart money commercials, the hedgers, have gone net long. So why has the smart money sold the Canadian and bought the USD? They followed it all the way down here. Then here in the 131 area, the specs go short and the commercials have gone long. We're a little bit off the level at the moment. Why is the smart money long? Obviously, the specs, first of all, have gone with this sort of view. The commercials can see that more CAD strength hits exports and competitiveness, okay, Canadian industry at the same time as the global economy slows. Also, with the global economy slowing, which it clearly is, that's going to hurt Canada, not just in terms of industry, manufacturing and so forth, also in terms of commodity prices will fall. And Canada's a big exporter. I'll put up point number 4, it should be point number 3. Domestic firms are already concerned about how strong the Canadian dollar is. Also, the Bank of Canada do not want a stronger CAD, okay? It will hurt growth, obviously, and also reduce inflation. And when the Canadian dollar has strengthened to these sort of levels in the past, you'll see the Bank of Canada get very concerned. They'll come in and they'll start talking the Canadian dollar down. And in certain instances in the past, they've not been shy of going from a neutral to a rate cutting bias. Okay, we're saying they're going to do that this time, but in terms of them not cutting in the price. On the other side, the US Fed is unlikely to reduce rates as much as the market expects. Market expects a cut this month, a cut in September, and 3 more through to mid-2020. Well, if it happens, it's in the price. We don't think the Fed are going to cut as quickly as the market thinks. So it's as good as it's going to get for the CAD. Okay. Now, in terms of Societe Generale, they're just taking that sort of economic view that's what they've said is not in the price. It's just going to continue. It's not. When you've seen the smart money in the past go long aggressively like they have now, and specs cross with them, you will normally get a break in favour of the commercials. Right. On the chart itself, we take the trend. Obviously, commercials are short and we come down, come back, rally to the 20-day moving average, which very often will hold in strong bear trends. Nearly come up to it there, but don't. And then we're basically just a couple of blue candles after a big red. Now, in terms of if you were to look at a monthly chart, I'm not doing the monthly chart here, there is strong support at 130. It's a round number. So round numbers normally are very important in trading. That is monthly support, okay? This fall here doesn't reach monthly support. That tail there, I think could be the exhaustion. This tail doesn't reach that tail, small blue. And then today, it's early in the morning, we haven't seen much activity. We've got small blue candle. So I draw trajectory. Kind of got that. And in terms of us in the member center, we are already long. Only a few pips in profit at the moment. Now, might be thinking, well, why not wait for the 20-day moving average to give way? Well, from our perspective, the smart money, the way they've moved against the speculators, we think the 20-day moving average will get run. Now, if we do come up, okay, this 20-day moving average will sneak down. And it's that level there that needs to give way. You could wait until 131 gave way if you wished. I want to add, basically, if we start to gain traction to the upside. Now, at the minute, I've got my stop back behind 130, 129.60, but I'll bring that up behind that red candle there if we break her. Okay, so that red candle body low. If we break above this level 131, I just think the 20-day moving average give way. I'll double and then see if we run where we're going to go to. Well, personally think the dollar very oversold. Sorry, should get up to those 3 candles there, maybe even back to chart highs. Yeah, for us, like I said, it's as good as it's going to get for the Canadian dollar. It's not just on the US dollar either. Smart money selling the CAD everywhere. And I just want to revisit a pair we looked at in our last video on the Canadian dollar, which is next pair is CAD CHF. Right, just on the CAD CHF. Now, in terms of COT net traders positions, I've expressed them here as a ratio. And this ratio here is plus 7.5, which is a really good one in this pair. And the ratio comes from the divergence between specs and commercials. So its speculators got 3.7 to 1 in terms of longs over shorts, so very bullish. Commercials 3.8 to 1 in terms of shorts over longs. So commercial smart money, very bearish. The divergence has built up quickly. It's a really great one in this pair historically. And what I like about it is the technical picture as well. So if I draw a level of a resistance in, really, sorry, up at around 76.30. You can see over here, difficulty in getting through the level, down, up again, exhaustion, another go, can't get through, nice move down, a little bit of a rally, then down, then this really aggressive rally up, and that in the last video we said we thought would be exhaustion, and yeah, we've come down a bit. Okay, so in terms of, you look at these rally rejections, they're decent falls to the downside, and the CAD here is more overbought than on these two previous falls, so I don't see why we can't get down towards chart lows. So trajectory in there. Then I think you've got a level of resistance just below the 76 level there. Okay, two bodies, almost that tail there. I think if we go red, should go down towards those lows. So really I'm going to go through those three tails effectively. Stand towards about 73.60. Now, if we sell off, where would you put your stop? Do you want it back behind here? I think you could probably be a bit closer behind this red tail here, okay? But it will give you about a 3, well, if you put it behind the tail here, you've got about a 3-to-1, haven't you? Could be a bit more cautious and put it back up here. I don't think this level is going to get taken out. But it looks really good. Yeah, the technicals, yeah, they just look like they're getting pretty bearish. We can see what happened on the previous falls, and yeah, the CAD is more overbought than on the two previous falls, so I do not see any reason why we can't get down to 73.60. Okay, now in terms of the next pair, I'm going to do GBP CAD, which is a pair I'm just really interested in this week. I'm pretty interested in the GBP anyway, but GBP CAD just looks so attractive. Let's just go and take a look at it. All right, just on the GBP CAD daily chart, and in terms of the CAD, it is the strongest currency in 2019. The weakest one is sterling. So you've got strongest v weakest, and look at this for a trend. It breaks the 20-day moving average, and obviously you expect the 20-day to move, hold rallies in big bear trends. We don't even touch it. It's still going down as I'm doing this video. Now, in terms of, from a pure technical perspective, no indication here of a trend change coming or potential trend change. But on the COT net traders, there is. Yes, speculators 4.2-to-1 in terms of shorts over longs. Commercials 3.5-to-1 in terms of longs over shorts. That divergence between two groups, plus 7.7, has really built up as we've come through the 164 level. The commercials were really heavily short as we came down, started to bail out of shorts into 166, then get out of shorts altogether and go long as we came through 164. Now, in terms of the commercials and the speculators, since this data came out last week, I would expected them both to add to their position. So in terms of this trade, I think it's just going to snap back, okay? Now, if you're trading it purely technically, you'd probably wait for quite a bit of confirmation, because technically it's a strong downtrend, isn't it? So you might wait for the 20-day moving average to give way, or maybe 166 or something like that. With the COT, I think you can always be a bit more aggressive. And I have had a trade on this actually previously, did an aggressive entry and got stopped out, but it's not a big loss, okay? And I think, it warrants another long trade now. I know this is an aggressive trade, but for me, we broke previous support there. Okay, so, and also if I draw a trajectory, that will go through the high, but you can't probably see it because my lines are a bit thick there. I would come straight back through that level and assume it's going to be a false breakout. If it runs on the downside, it runs onto the downside, but I would go 163.50. where you might be thinking, well, where would you put your stop? There's no support on this chart. There isn't, but there is on the monthly chart, and it's going to be there. It's a round number. It's 162. I'll just draw it for the sake of illustrating risk to reward. So straight back through the high, stop behind here, 161.60, and then see if she runs. Now, because the speculators have built up their shorts aggressively here, there'll be a lot of stops to be taken. Okay, obviously we've got to turn up. This is an aggressive trade, but my view is come through here. I think the stops will start to get taken, the selling will exhaust, and because sterling is so oversold, this level again, a weekly level, would be the target. 170. You'd obviously manage the trade as it goes, okay, but obviously it's got to come to fruition, but it's going to be about well over 4. Well, it's about 4 to 1 in terms of risk to reward. She came down through 162, the monthly level. I'd buy her back through 162. This trade, in my view, will snap back. I don't want too much confirmation because I want to use a relatively tight stop. Okay, it's the most aggressive trade we're looking at today. I really like it though, so we will be having a go at this one. Now, in terms of the last pair we're going to look at, it's another really good one actually. It's CAD JPY. Right, last pair, CAD JPY, do the levels in a moment. In terms of CRT net traders positions, this divergence isn't quite as big as the ones we've already seen, but again, it's built up quickly. Okay, and I like the technical action in this pair, and also I'm very bullish of the yen longer term. And you can see speculators 2.3 to 1 in terms of longs over shorts, commercials 2.5 to 1 in terms of shorts over longs. And the commercials were pretty long until we got towards the 83 level, and now we're stalling at the round number. Round numbers just are important in Forex trading. I know I say that all the time. You're always going to get a lot of order flow around them, particularly from big institutions. And as we come up here, tails poke through, but can't sustain the move up. This tail here pokes slightly above that tail. No more buyers. This tail here, trying to come up to the level, can't do it. Sorry, let me just get my mouse to work. So basically, it's a kind of double trend line. Get the general picture. I think 83 will be tough to take out. You don't stop just behind the level, in my view. If you're going to do it, I think you want to stop clear of the tails behind one body, two bodies, and that kind of tail there. I think that will do it. And then look for downside motion. I think she's going down anyway, but coming in fresh, I think, here. So basically through body, 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 you get clear of the round number, 82, I think it's 65, you can check for yourselves, 65 or 60, and then see if she runs to the downside. And because the CAD is so overbought, I don't see any reason why we can't go down to test the round number. Okay, so through that level, it's going to give you about a 3 to 1, isn't it? But if you come through this level, and again, I'm not going to wait for the 20-day to snap. If the 20-day snaps, okay, you can bring your stop in a bit tighter. But again, another decent looking short CAD pair. In terms of trading the CAD short, which pairs would you do? I say very often, if you're not sure which is going to run the quickest, you can just divide your risks that you want to take between the 4 pairs that we've looked at. My sort of bias, the biggest bias, is on GBP CAD. That's my biggest position. CAD JPY and CAD CHF, and USD CAD will be smaller positions. It's down to the way you see it. Okay, I'm just particularly pound bullish. Like I said, that view hasn't worked out yet, but if it does, and what I think happens, that GBP CAD Just looks fantastic. Risk to reward trade. So yeah, that's my view. See as we go forward in the week. Is there any important data out for Canada? You got inflation data out later in the week, but I don't see it being any better than the market expects. So it's kind of in the price. I think the good news is in for the CAD. Smart money's telling us that. I'm going to go with the smart money. Right, that is the video for today. Thank you very much for watching me as usual. Take care and have a great day.